Hey, what's up guys? John here. Jerome Powell just came out and said that catastrophe is coming for U.S. business. Now he's saying this because we already are seeing large scale structural change inside of these companies. We're seeing a lot of layoffs. We're seeing a lot of companies reassess risk. They're issuing cost-cutting strategies right now to try to weather the storm. The old saying that I'm hearing inside the real estate community is survive until 25. Now, a lot of companies are following that same protocol. Now, what are they going to start to do? I think a lot of them are going to start to rethink their former hires over the last couple of years. Now, with the Great Resignation, many companies are paying 15, 20% more to obtain an employee. They're giving sign-on bonuses. They're doing things that they, didn't anticipate doing. But now as consumers contract their spending, companies are going to have to reassess how they're going to, pivot through these difficult times. Now, what I think is very likely going to happen is we're going to begin to see more and more and more layoffs, especially as Jerome Powell continues to increase interest rates in the short term. Now, as he does this, I believe we're going to see more and more and more companies go belly up, and they're not going to be able to pivot through these hard times. Now, in this video, I'm going to break down exactly what's going on and exactly where I see this economy and business going. I think there's going to be a lot of opportunity for smart and savvy entrepreneurs that really, follow what I'm saying and really do their own research and look into this, because what I think is going to happen is we're going to see a whole new America to the likes of which we've never seen before. Please hit this like button. When you hit the like button, YouTube's going to share this content to educate more people on what's really going on. Also, today's video is sponsored by GreatCreditFast.com. That's GreatCreditFast.com. If you'd like to fix your credit, we'd love to help you. Schedule a free strategy session in the link below. Take a look at this. So, layoffs last year, all last year, 164,000, right? Almost 165,000 layoffs. All of 2022. Now, it's already 212,000. As Jerome Powell continues to increase interest rates, it's very likely we'll see about 500,000, possibly more layoffs in just the tech sector in America in 2023. And that number, I believe, is modest. Every quarter point hike that he does from here on out is going to be felt even harder than the ones before it. And things are just going to get more and more and more challenging. But we look at a couple things. Look at a couple things structurally. We have $2.9 trillion in commercial loans, half of which need to get refied inside of the next, call it 18 months, 24 months. Now, what are these loans, what are they going to do, right? We're going to start to see a lot of businesses lose office square footage. We're going to see a lot of these commercial properties go back to the banks. We're going to see a lot of these businesses really start to look for outsourcing and strategies in which they can cut costs effectively, right? All of this is going to play a very, very large role in lending, and many businesses rely heavily on lending and financing to be able to stay in business, right? So banks are going to start to tighten up more and more and more. As this is happening, look at this. An upcoming economic contraction is already here. It says, if you find yourself alone riding in the green fields with the sun in your face, do not be troubled, for you are Nestlum, and you're already dead, right? Investors continue to ignore the fact that monetary policy is a substantial lag factor. Commercial Chapter 11 filings increased 68% in the first half of 2023. New York, this is yesterday. The 2,973 total commercial Chapter 11 bankruptcies filed during the first 6 months of 2023 represented a 68% increase over the 1,766 filed during the same period in 2022, according to data provided by Epic Bankruptcy, the leading provider in U.S. bankruptcy filing data. Individual Chapter 13s increased 23% during the same period. Overall, commercial filings registered 12,107 for the first half of 2023, representing an 18% increase from the commercial filings report, and 10,258 in the first half of 2022. Now, if we look at what's going on in business and we look at what's happening in tech, it's really incredible. 15, 20, 30, 40, 50 years ago, if you wanted to run a really successful enterprise, you needed hundreds or thousands of employees. But what is going to happen soon is you're going to see successful business. You're already seeing it now, but I mean really successful businesses doing $100 million a year, running with 5 employees, 4 employees, 10 employees. Really, really small office square footage needed, really small expenses needed, tech innovation. That's what's going to happen. And the people that are at the forefront right now that are really studying these advancements are going to be the ones that do well. Because during good markets, bad markets, any markets, if you have 10 people and very limited expenses, you're going to be able to cruise through any type of climate, right? And that's what's going to happen. We're going to see more and more and more of these businesses do that. But in the process, we are going to start to see a lot of jobs get laid off and a lot more layoffs occur. U.S. corporate bankruptcies are on the rise. Instant Pot and Brooks Brothers aren't alone. Bankruptcies for large corporations hit 2020 levels. Corporate bankruptcies and defaults are surging. Here's why. And so they go on to say that it's rising to levels not seen since the Great Financial Crisis, 2010. Now, when we look at a couple things that are happening that a lot of people want to forget, this economy, this fake economy that we're in, was all, especially the last 3 years, it was all predicated on easy monetary policy, 0% interest rates where bills were optional and money was sent home, PPP loans. Everything was just a perfect situation for nearly any business to flourish. I mean, anyone could have made money in the stock market, in real estate the last few years. But as we start to see Jerome Powell continue to increase interest rates and we start to see this job market start to fade away, we see $17 trillion in outstanding consumer debt, over $1 trillion in credit card debt, $1.7 trillion in student loans, and $1.6 trillion in auto loans, most of which are upside down, meaning they owe more on their cars than it's worth. When you see all this coming to a head and Jerome Powell continues to hike rates and wages are starting to come down, what's going to happen, right? It's obvious. We're going to see a large contraction to the likes in which I think we've never seen before. I'm not saying that to concern anyone, but if you look at 2008, it was a mortgage crisis. It was a lot of bad policies enacted, sure. But we never had a situation like we have right now, coupled with a transition from current fossil fuels to this clean energy. We're looking at a transition of everything. You know, CBDCs, all these different things, everything is happening at the same exact time. Now, when people want to say, you know, this economy is going to be fine, everything's going to be fine, I'm just looking at structurally what's actually changing. I think that there's going to be massive opportunity. I think there's going to be massive opportunity for smart and savvy entrepreneurs and investors that see everything for what it is. They're really responsible with their debts and their obligations. They position themselves and their company to seize a lot of this transition, this opportunity. Those people are going to be completely fine. But there's going to be a large percentage of people that say, you know what, I'm going to go along with business at, you know, as if it's 2017 or 2018 again, and everything is just going to remain as it was. I don't think that's going to happen. I personally think that we're going to see many of these businesses go away. Look at, for example, mom and pop property owners. Mom and pop property owners own 20 million housing units, 20 million housing units. Most of these housing units in small duplex, triplex, fourplexes, these properties, they were acquired by these mom and pop business owners as their business succeeded in the 80s, 90s, 2000s, and they just invested, right? But when we start to see this economy completely get restructured, what are these mom and pop property owners going to do? They're likely going to have to sell their properties. There was an article CNBC put out saying that something along the lines of like 30 or 32% of the entire housing stock will be owned by institutional investors by 2030. So you start to look at this, everyone sees the writing on the wall except for the ones that want to ignore it, right? That's what I think is going to happen. I think we're in the greatest wealth transfer of all time. I've talked about this on this channel. I thought the last 3 years are the greatest economic rug pull ever set up in history. And smart and savvy investors are, looking at everything like, okay, how can I pivot through this, get straight through this with limited debt, limited adjustable rate consumer debt, put myself in a position to where I have a really strong team around me, a really good business, I'm in the right vehicle, I'm able to just to cruise straight through it, assume wealth, invest it in distressed assets along the way, and position my family for success, right? That's what I think is going to happen for the smart and savvy. But these corporate bankruptcies, I'm telling you, these corporate bankruptcies, we have not seen anything just yet. What do you think about this situation? Where do you see this all going? Do you think we're walking into a situation where we're going to see even more bankruptcies than 2008, 2009? We're already at that level right now when most people think that this economy is completely fine. So behind the scenes, we're at 2010 levels, but right now everyone's like, oh, everything's completely good. But Jerome Powell is still saying we're going to hike rates again, and we're going to hike rates again a couple more times throughout 2023. I don't know. To me, the picture is very clear. It's very easy to see. It's the greatest setup ever in the history of mankind that we're in right now. And between 2024 And 2030, you're going to see more wealth transfer hands than ever before in history. Like the next 6.5 years are going to be absolutely unbelievable. Make sure you position yourself well. Drop your comments below. Hit the like button. Add me on IG for short form content you won't get anywhere else. And I won't post here. And if you need help fixing credit, we would love to help you at greatcreditfast.com. That's greatcreditfast.com. Schedule a free strategy session on our website, and we can see how we can help you. I'll catch you guys in the next video.